We should not. Okay, guys. Welcome. I just started the recording, and you should not stay away from this market. You should be following the different kind of oscillators and indicators. That's what these are the kind of markets that I've trained you for. One thing that I'm seeing and which I'm a little worried about is when the market is going up, I see good volume. I see people are entering the markets. They are working. They're taking trades. But somehow, when the markets are going down, I still see that many of you stay away from the market. You still have to program yourself that when the market is going down, that's when also I'll have to make money. But most of you are still waiting for an up move to happen before you enter the market. It has nothing to do with the techniques, it has everything to do with your psychology. And this is something that you need to work on. So it's extremely important that your shot is very good, Umesh, but you have to have the discipline, and that's why we have all these tools, we have the trading plans, and all this is because you should be able to take money in long and shorts. So today, I saw a few traders, they made good money in the shorts, real good money they made into the shorts, but you have to really plan for it. And today, we will be talking about trading plans. We were talking about it last week also, and we will go through the Excel sheet that I have sent to you. But in addition to that, I will also show you a few websites where good pointers are given as to how you should make your trading plan and what is the best way you can make it right. So why a trading plan? The very reason you make a trading plan is so that you can document it. There is a book called Think and Grow Rich, and I like the saying from that. It is called Think It, Ink It, and Execute it. You first write it down, then only you execute it. Creation always happens twice, once in your mind and second into the real world. Similarly, trading also happens, you know, uh, two times. Once it happens in your mind and on your piece of paper, and then only really it goes and it goes into the real execution. The problem that happens with most of us are we are in a hurry to execute the trades. We are in a real hurry. Despite all the training, despite everything, it is a real challenge for many people to actually go and have the patience to write everything down and before we can go it. Now in the trading room, there are about 20 people who come sit and trade. That's the capacity of this trading room. So 20 people sit, come and trade, and every day we interact. In fact, this is the best training that they will ever get. So because every day, we are interacting with them. I'm with them at least once or twice in a day. And now I've made some rules. The first thing that they get is the moment they enter up, it's on the first floor. The moment they enter into it, and in front of them is a big board in which it is written stop loss, and it can't be rubbed. It's with permanent markers. Some people tried rubbing it, they couldn't rub it. That's number one. Second, on the left side, I have put a set of rules. There's a set of rules on the left side, and obviously the first one is always the stop loss. And one other important rule I have written there is to limit the. There, I'll send it. Don't worry, it's a very small thing. I'll be sending it. So I'll not send it to anybody, not only to you. So what we will be working on is, what we were working on this uh, is that, you should not over trade, but then you should not under trade also. And we were working on a rule of four, that four intradays trades, four swing trades, four positional trades, and four long-term trades. Then each trader has to maintain his trade lock. Of course, guys, you're gonna have it here. Come on, can I continue with this? You can even write an individual mail for this one, please. When you write this, my whole thought process goes off. I'm in the process of telling you something really important and telling, can I have a calculator? Just go on Google and Google it. You'll have 100 calculators there. Please have some patience. Okay. So then when we are moving and going, by the way, Vinay, you haven't paid your 200 rupees. Since you are mentioning it here, your 200 rupees for the picnic you have not paid. Please pay it. Okay. So 4 trades per day. What will happen is that will limit us. That this is the maximum number of trades that we are going to go into. Third, very, very important thing is to log it. It's extremely important that we log our trades because we are new into this field. And what will happen is if you do not log every trade, because you know after some days, what will happen is you won't even remember what you are doing. You have learned so many techniques, you have learned so many methods. In fact, in the 4 days, so much material has been given to you that until unless you start using it and you are not, going to document it properly, you won't know what is working for you and what is not working for you. This is extremely important. What is working for you, what is not working for you, you would, you will not get to know. So that's why it's other very important thing that you document every trade that is happening. Then other rule we had put is that you complete your trade after the trade has been finished by logging it again and then finding your R multiples. So every evening when the trader goes out, if I'm there at 3:30, I personally check the R multiples. And this is what something that we will be talking about today. And to become a good trader, it is extremely important to document everything. It's extremely important to document everything. And uh, you know, you have to make a trading plan in such a way that it reflects your personality. I cannot overemphasize the importance of a trading plan. And this format that I have given you, it is the base format with which you start, but doesn't mean that this is the only format that you would be going by. Don't do that, but we'll go through this and then we will add something extra into it. Number one is that some people ask me, sir, isn't it enough that I write my name? Why do I have to write the name of a company? I'm going to become a trader. Why write the name of a company? Because when you're writing the name of a company, then you are planning that this business will extend beyond your death. You will give it to somebody, maybe to your sons and your daughters, to your wife, to your family. Somebody else will take care of this business and it will go beyond your death. Number one. So you have a long-term vision about the business. Today I was in Ghatkopar watching a fantastic movie, Swami Vivekanand, lovely movie. And when Swamiji he was traveling to US, to give his epic lecture to the World Religious Congress. Then the ship on which he was traveling, he met Jamshedji Tata. B.R.D. Tata was traveling in the same ship, and he was importing a lot of things at that time, and he was just, importing it from outside and selling it in India. And Swamiji gave him a vision. He said, "Why are you importing everything? Why are you not manufacturing something in India which will lead to a long-term growth for you? You'll be using the local resources and for the long-term growth of the country itself." That one single thing caught Tata's attention, and that's what created Tata, a comment from Swami Vivekananda. And this is what happens in trading also. In trading, there are two entities. Since you do not have any employees, you do not have any infrastructure, you do not have anybody else working for you, and you are not working for anybody. So how will you create that attachment between the individual and the company? How will you create that attachment? And that attachment is created by dividing yourself into two parts. Number one is the company that you own, and number two is the you know number two is the person who you yourself are who are working for the company. So once you name a company, let's say ABC, or we are putting Ram Babu Dhoot and Company. So then what happens is Ram Babu is working for the company named Ram Babu Dhoot and Company. That means the company is interested in him only if Ram Babu is giving something to the company, he's adding some value to the company. Okay, if you are working for a company, now answer me, guys. In what ways can you add value to a company? Please answer. I'm waiting for your answers. In what way can you add value to the company? Sales. What else? Earn money for the company. What else? Profits. What else? Contributing to it in renew. Customers should never be left. Growth. Knowledge. Knowledge. Narayan, integrity and ethics. Good answers are coming. Real good answers. The intellectual capital, the skill capital, integrity and ethics, creating goodwills, your time and effort that you put into growing the company. Yes, all of you are so right, guys. You're giving very good answers. So what is happening? All this when you're giving to the company, that is when the company is getting the required impetus and the required stimulus for growth. That's what happens is. So when you when you work for some other company, let's say you're working for somebody's company or your own business, you're continuously working on that. But somehow, when you take trading as a business, since you and the company do not look separate, you and the company do not, look separate. So many people do not know how to work for the company. So how will you find out that your company is growing? That Ram Babu Dhoot and Company is growing. Leela Solunke and Sons is growing. How will you find out when it is growing in two, three ways? Number one is your skill about running the company is increasing on a continuous basis. When you know that in the foundation you are doing and working something on a daily basis. On a daily basis, you are making a company. On a daily basis, you are contributing to the company in such way that the company will grow in the long term. For example, if you study 1 hour a day, the technical charts, if you put your trade log in place, you are continuously learning, you're continuously making sure that you are growing as a trader, then you are working on the foundation of the company. The foundation of the company is in your head. And then at the end of the month, when will the company pay you? The company will pay you only if you are giving it some value. Value in terms of either the building the foundation, or in the end, the value in terms of profits, in terms of growth. That's what they pay you in your company where you are working. They pay you for the value you have added to the company. Not every month you contribute into the profits. There are many months in a company where no profit comes, but something real good goes into the foundation, because of which at a later stage a lot of profit comes. So you ask yourself at the end of the month, what have I contributed so far so that this company will pay me? Some of you are with me for 4 months, some are for 3 months, some are for 2 months, some have just passed out in August. So answer me now, guys. In the time since you have passed out, the company that you have made, whatever the name is, what have you contributed to it so far that it should pay you? Answer as honestly as you can. Now, from this moment, it is a personal, whatever you write will be visible to me only. Would be visible to me only. So you don't have to, you can write as freely as you want because nobody else would be able to see what you have written. Yeah, keep on writing. Each one of you write. So it's limited to me. You will, nobody else will be able to see it. I will not repeat what you have written here. Nice. Getting some good answers. Some real good answers I'm getting here. Fine, great. Good answers, guys. These are nice answers. So you are adding. So now this is one thing you have to ask yourself on a monthly basis. On first of every month, ask yourself, do I deserve my salary? Have I done enough for the company that company should be paying me? This is a very good, very important thing to have. And then from the profits that you have made, you can ask the company to pay you something. That's why you have to work very hard to make an entity and separate yourself from the entity so you are the owner and the executor and the employee at the same time. The second thing that you need to, the next thing you need to understand is what is your vision and what is your mission. Your vision and a mission has to be, if you are getting confused between vision and mission, you can write any of that. You can just write the vision. For example, yeah, some people say, till the time company is not making enough money to pay me. So that is also okay. But you're working towards making the company. Then your vision has to be very, very clear. Vision is something that gives you happiness. It doesn't have to do with trading. But when you're writing your mission has to do with trading because here you are very, very specific that you want to become a profitable professional trader. Your vision can be non-stock market. It can be, well, I want to contribute to art. I want to fulfill my social responsibilities. I want to work to uphold the poor. I want to educate the girl child. It can be anything, you know. But it has to be specific. It has to be something that has to be that will motivate you. That will motivate you. So trading since 2006, 2005, 2012. I just started. So write down the years so that you know how many years you are into this. For example, this is a sample trading plan I've taken up. If somebody is saying that I'm trading till 2006, since 2006, and now it is 2013, then it is 7 years that the person has been, trading, is into the trading business. And he should ask yourself, in these 7 years, I've given 7 years of my life to this profession. Have I achieved the desired results in terms of fulfillment, in terms of satisfaction, in terms of happiness, in terms of profits, in terms of growth? Am I 10 times better in 2013 than I was in 2006? I regularly get myself. I have a person known to me. This is yesterday's incident, and that's one of the reason I was a little disturbed today because this person could have done wonders. He came to me in 2008 and 2007, sorry, when the market was booming, not 2008. And he opened an account with us. That time we had a newly opened franchisee of Sher Khan, and it was basically for my students who were learning from me. And he started looking for shortcuts into the markets. And despite all my efforts of 1 year, I couldn't bring him on track. I failed miserably. And at some stage, because my route was the learning route, after 2008 market going down, and then in 2008 mid itself, he somehow vanished somewhere. And I didn't see him for many, many years. I thought he has migrated somewhere, has gone out somewhere. And yesterday I was in my office a little late, and I was just sitting reading a book, and suddenly somebody knocked on my door and asked for permission to come in, and I realized, it's the same person whom I last saw in 2008. And he had come to me, he said, "Can I sit in front of you? Sir, आपने मुझे पहचाना?" I said, "Yes, मैंने आपको पहचाना, sir. I am meeting you after many, many years." A person very senior to me, he must be around 52, 53 now. And he sat in front of me. He was obese now. He must have gained about 10 kilos. I could see he was very tired. And so how can I help you? Got him a cup of water, then a cup of coffee. And how can I help you? He said, "No, sir, I have come to discuss something very important with you." I said, "What is that?" And he said, "Sir, about 1 month ago, I have discovered a book in Gujarati. It is a 70-year-old manuscript, and it tells about the methods by which somebody can become very rich into the stock market. And, you know, I've come to you so I can discuss this in detail with you, and we can work something on this, and we can even share it together." So I asked him, "Sir, whatever you are talking, I'm sure it is very great. Have you tried that with your own money first before jumping to a conclusion?" And he said, "No, no, I've been doing a paper trading for 1 month, but the results are great. I've been able to make a 40% in a month." I said, "On a paper trade?" He said, "Yes." So, and I said, "In last 1 month, trading a simple moving average, people could have made 50%. So why don't you do one thing? Why don't you just go back and try it for 4 months? And if it's such a great thing, then why bother? Just do it." But this has not worked for you. For the last, since 2008 till today, the person is only trying to find shortcuts into the markets. He never bothered to learn. He never learned at all. Left his job, and I'm sure he requires money right now. That's the reason he came to me. And he was in a bad shape, still looking for a shortcut. If he would have just given 2 years sincerely to this business properly, today he would have been somewhere else. And this would be a case, I'm sorry to say, with few of the people. Out of every 50 people who pass out from my class, two of them become like that. Despite all the efforts, they drift away. And they start looking for shortcuts, then they start going. These are the people who never make a trading plan. These are the people who don't want to go the hard way, and these are the people who thinks that there is a shortcut here. There is no shortcut. This is one thing I very clearly say. And this is another thing I always say is that if you are not ready to work hard, all your efforts will go waste, because you have to be sincerely working for about 6 months before profits start coming. And the good news is I see at least 30% of the people so far who are doing good, who have got out of the loss trap and who are coming into the zone. All this hard work that we are doing together, it will take a few years to see results. We are not into a get rich quick scheme. You have entered into an arena where hard work is required. About 6 months of hard work. And trading plan is not something that you just write once and never look at it again. It is a document which is your Bible and which you have to look on a daily basis. You know, yeah. Then, sir, most of the time people look at our efforts as foolishness. Okay, I'll unmute it now, guys. Everybody. So, yeah, exactly. Many of the people outside will think that you're crazy. Why not take a tip? Why not go the easy way? But this is the way that you will make the most of it. This is the way you have to work hard. This market will surprise you all the time, but the money is real, guys. Money is really, really good. We have one Mr. Dalip, he is from Andheri, and he called me in the last 8 days 2 times. The first time he has made a profit of 1,59,000. And yesterday he called me and he said, I had made a profit of 1,65,000. But his capital is great and he was trading options. And he was just pure lucky. He's enrolled for my class now. He's coming into the Andheri batch. And he says, sir, for these two times, I'm just pure lucky. And I don't know how this has happened, but I've got this much money. But I don't know tomorrow how will I get it. And he has also lost a lot of money. Like in the last 10 years, he has lost about 20 lakhs plus. So he said, I make a lot of money, then I lose a lot of money. And that's because he has no plan. Then it becomes a gambling den where you make a lot of money and you lose a lot of money. Till the time it doesn't become absolutely, totally scientific, absolutely, totally, proper, you would not be, in a position to take it 30, 40 years ahead. And that's the vision with which you are working. And with my own limited efforts, whatever I can do, I do. I'm not a company, guys. I'm not a big corporate. I'm an individual trying to do my efforts, whatever I can, and whatever is the maximum number of people that I can reach. That's what I am trying to do. But from the other end, if you work hard, you have a real chance, solid chance, a real solid chance of moving into this. So, you need to have this trading plan. It has to be on, it has to be proper. Then you have to write what is my personality and why is your personality important. Your personality is important because we all have a personality, and like it or not, you would be trading your personality. Your personality would be your biggest challenge, and your personality would also be your biggest positive for you. So find out what is working for you, find out what is not working for you. uh, Satish, to find your personality, you have to take the Tharp Trader test. It's a test that I have given. So just take a Tharp Trader test. You know, in a Tharp Trader test, your personality is mentioned. If you have taken a test and you say, I don't know my personality, what the answer you're getting into the Tharp Trader test is your personality. So then you add more things about your personality. For example, you know yourself. For example, if you've got a short temper, then you can write down, I have a short temper and I'm very short on patience. I tend to do things very fast. You are impulsive. Then it is even more important. You say, I will not take the trade. I will prefer to miss the trade, but I would not take the trade until unless I'm very specific about the trade. And, that's what will make. I got a call from Zahir in the evening, and Zahir was asking, sir, this trade that you have, a specific query he had about it, and we spent about 3-4 minutes together and working on that. So it was not the chart where his issue was. His issue was in his personality because he had a different vision of looking into it. Kindly remember the charts are the same, but all of you are different. That's why all of you will look at those charts differently. So you have to find out how do you look at the charts. And that's where your personality becomes very important. Write down the positives and negatives in your personality, and then find out what are you going to do there. If this happens, then what will you do? Then, like today, in the morning, uh, you know, yesterday, not today, sorry, yesterday. Today I was not there. Yesterday, one trader came to me and I had to refuse him the trading room. Even though one seat was available, I had to refuse him. Why? Because he wanted to sit there with a capital of 25,000 rupees. He wanted to make 30,000 rupees a month. He wanted to quit his job and he wanted to. That's not possible. I said, if you want to make 200 rupees a day, well, more than welcome. Leaving a job, don't think of this nonsense ever. When do you leave your job? Either you make continuously money for 1 year more than your job, or in an unfortunate situation, if your boss kicks you out. That's when you can choose to become full-timer, not before that. So do not be in a hurry to leave your jobs. Full-timer is fine once you are into the profit zones, but for most of the people, starting part-time is good enough. What is your trading style? Trading style is important to know. Depending on the time you have, and sometimes even if you have the time, depending on your personality, for example, don't want to spend a lot of time every day, even though you have time, you want to do something else, then you can choose to do swing trading. And in case you like the thrill of a daily thing, you also want to spend time, you want to become a full-time trader, that's when you can choose to take intraday. And ideally, what is the personality style? You know, as per the personality style, what happens is that you see which form of trading suits you. So some of you have been trading, guys. What, which one do you like? Is not what you do. Which one do you feel more comfortable doing, guys? Which trading style are you more comfortable with? Please write. Okay. Some write swing, some write intraday, swing and positional, swing, intraday, intraday, swing, intraday, and swing, swing. Most of the people here, they are liking swing form of trading, which is fine. Swing form of trading is fine. Intraday. So do the type of trading when you are doing, for example, but when you're doing a swing trading, then you have to be very, you have to know that your risk would be higher. So if you have taken your risk level as 1,000 rupees on a trade, then and your ATR becomes bigger. So your position size have to be smaller. So your position size in a swing trade would be smaller than your position size in a in a in an intraday trade. So in an intraday trade you will have more position size. In a swing trade you will have less position size because the risk taking capacity becomes different here. Now your strengths, your weaknesses, write down. Then your TARP profile. Your TARP profile may you are given a trader. You know, read about that trader on a regular basis. That this is the trader who is more like me. And what I suggest is that the more you read, the better a trader you will become here. So give yourself these 6 months and be very, very serious about these 6 months. Every day study. Every day spend 1-2 hours studying, revising notes, going there, watch YouTube videos, read stuff, do things. And if you do that, then you will be doing well as a trader. Now, this is what are your goals and purpose of trading? Be very specific about them. Like, for example, to be financially independent, to expand and grow, to grow intellectually, to go on an international holiday every year, to spend more time with my family and self. And uh, every month, write down how close you are to this goal that you have written. You know, so for candlesticks, the book is Steve Nissen. Steve Nissen is the book. I'll be sending some regular books to you guys for studies now. I think people are not buying the books, so I'll send some from my own collection. So one, yeah, you should have a goal book. Goal book is always good to have, but that would be part of your trading plan here. So see every month how ready or how near you are to your goal. For example, to be financially independent. Well, a good litmus test would be if you can start running some of your house with it. Otherwise, it is just intellectual stuff. So if you are making that 20, 30, 40,000 rupees a month, you're taking it out. That's when you can say I'm going towards financial independence. To expand and grow as a human being. So is that, are you coming near to that goal? Is trading allowing you to practice a passion that fulfills you, to grow intellectually? If you are Yes, exactly. So, to go on an international holiday every day, to spend more time. So write down what are my goals and purpose of my trading, and how am I going toward every month? Am I going towards it? Am I going away from it? Are you, if you're making losses, you're going away from financial independence, then it's much better that you are not trading. So it is, but if you're making profits on a regular basis, then you're moving towards your, you know, financial independence. Then hardware and software to trade. You should have in this, you should be very clear. You have internet connections, a proper laptop, a place to sit where you can sit and trade, plan, write down your trade, have a trade log. So everything should be there. Then you need to have your pre-market routine. So I'll come to this pre-market routine, but before that, let me show you a few websites I had opened, and let's go into that. This was a number one that I saw. This is from a site called tradecrushers.com. So www.trade.com. You can go on this site, and here they have this very nice 7-point template to create your trading plan. Let's look at a few other tools that are available. One of the first thing beginning traders are told to do is to create a trading plan that will spell out a trading strategy and a list of rules to follow in implementing that strategy. The only problem with that advice is that beginning traders don't really have any trading experience, and they are lost when attempting to create a trading plan. So another problem with trading plans, that new traders are instructed to treat their trading plans as gospel and told not to deviate from them. This prevents traders from adapting their strategies and rules to improve their performance, an essential step in every trader's learning curve. Then, instead of a rigid document, early trader and never to be changed, you should instead view your trading plan as a living and breathing set of guidelines capable of being modified as you gain experience. This article will teach you how to create a trading plan that will guide your trading plan without stunting your progress. I'm giving you 2-3 good places which can help you further into making your trading plans in addition to the templates that we have given you. So this is a 7-point trading plan template. Number one, what markets will you trade? You'll be trading stocks, you'll be trading commodities, you'll be trading options, you'll be trading forex. In stocks, you'll be trading futures, or you will be trading pure stocks. So define the markets that you will be trading in the start and why. So, Satish template has been sent to everybody. Check. In case you have not received anything, check with Amishta. But all the templates were sent immediately after the class was finished. So check your spam folder, and in case you don't get it, tell Amishta and she will send it back to you. So what market? This is important. This is really, really important that you are, what market will I start? You cannot trade all the markets at the same time. That's why for beginners, I say we'll start with stocks. They are pretty easy to start with. And if you don't have time in the day, you start in the evening, and then you start with commodities, but only with the risk that you can manage. That's the kind of, you should be very specific. How long will you hold your positions for? The time frame. Will you be a day trader focusing on trade lasting a few minutes, or a swing trader holding trades for a few days? We already have that, very well documented into our trading plans. Then, what time of the day will you trade? The time period. You may have outside responsibilities that prevent you from trading an entire day. Pick up which time of the trading day suits your trading style. So work on that. Then what risk management rules will you follow? This is extremely important. What risk management rules will you follow? This is an absolute essential and often overlooked component of your trading plan. And as you know, in my class, it's only risk management, risk management, and risk management. I go the way of risk management. How will you manage your risk, both on a per day basis and overall? You should have a stop trading point, stop losses. So this is something that you know very well about, that I'll be going by the risk management route. Then how will you structure your learning process as a trader? Your learning process, very important. What steps will you take to ensure that you're always getting better? How will you structure your trading journal? How would you put your trade journal into place? So this, then one other point, mentor. This is a very important point. Who do you follow and learn from as a teacher? Attempting to learn trading all by yourself is not only lonely but foolish, as it ignores the hard-earned wisdom of other traders. You can either repeat the mistakes of other traders and hope to eventually learn the lessons and techniques that they have learned, or you can successfully learn from successful traders and bypass those initial frustrations. That's what you come to a mentor for. Thank you. Thank you, Prashant. That's why you come to the mentor call, because those traders, they have done their mistakes, and they will save a lot on your learning curve. Otherwise, the learning curve can go on for years, and the losses you will make will prevent you from learning at all. So it's extremely important that you have a trading plan, you have a mentor, you have your practice, you have risk management methods, you have trading styles, and that's how you go for it. So extremely important to know that you are learning in a proper, in a structured way. So this is one article you might want to go about. I have chosen three from many that I saw today. Then there's another one. This is from investopedia.com. So this is a good site you should go for. Yeah, thank you very much, Narayan. Very nice. But I do fail sometimes. I sometimes do get frustrated. Sometimes I feel all this effort I'm taking, are they worth it? Because sometimes people do such stupid mistakes that I feel like banging my head against a wall. Anyway, so today is one such day, and you might have guessed from the mood I have, it's not the great one. So 10 steps to building a winning trading plan. This is from investopedia.com, www.investopedia.com. So this is a good site to go to. There's an old saying in business: fail to plan and you plan to fail. It may sound glib, but those who are serious about being successful, including traders, should follow these 8 words as if they were written in stone. Ask any trader who makes money on a consistent basis and they will tell you, you have 2 choices. You can either methodically follow a written plan or fail. In fact, these are the only 2 choices that you have. If you have a written trading plan, congratulations, you are in the minority. While it is still no absolute guarantee of success, you have eliminated one major roadblock. If your plan uses flawed techniques or lacks preparation, your success won't come immediately. This is one other thing, that you need. That just making a trading plan is not a guarantee of success, because making a trading plan is no guarantee that the trading plan is good. You have just started the process. When will you know that your trading plan is good? When it starts making money for you. And that's where you have to continuously, first you have to, till the time you don't make a trading plan, you won't know whether it is good. Good ka to tab pata lagega na jab pehle banaoge. So make your trading plan and then see whatever you have written on the trading plan, are you trading according to it? And if you are trading according to it, then are you achieving the required success or not? And that would be the litmus test of your trading. Are you achieving the required success or not? So if you have, you know, this is what the start is. That's why I focus so much on plan. So when you are doing trading, you have to treat it like a business. Because if you treat it like a business, that only it will be developing as a business. Once a trader knows where the market has potential to pause or reverse, they must then determine which one it will be and act accordingly. And a plan needs to be, modified on a regular basis. So, what are the major components? These are other components of good trading plan. Let's revise the 10 that Investopedia talks about. One is the skill assessment. Are you ready to trade? Have you tested your system by paper trading it, and do you have confidence that it works? And I don't even allow paper trading. I say start with one share, start with 5 shares, start with 10 shares, but start with real money. And that's when you will know for real whether you are, having those control over the emotions. Can you follow your signals without hesitation? Trading in the market is a battle of give and take. The real pros are prepared and they take their profits from the rest of the crowd who, lacking a plan, give their money away through costly mistakes. Kindly remember, in trading, lamenting later on is of no use. अगर मैंने ऐसा किया होता तो मेरा ये हो गया होता. That is the most useless thing that we can ever say in trading. The real challenge is when that market was moving, could you move with the market or not? And that's why you have to document it properly. It's very, very important to document it. Mental preparation. How do you feel? Did you get a good night's sleep? Do you feel up to the challenge ahead? If you are not emotionally and psychologically ready to do better in the markets, it is better to take the day off, otherwise you risk losing your shirt. This is guaranteed to happen if you're angry, hungover, preoccupied, or otherwise distracted from the task at hand. Many traders have a market mantra they repeat before the day begins to get them ready. Create one that puts you into the trading zone. There is a book by Mark Douglas, Trading in the Zone. So this is one trader that is worth reading. Mark Douglas. I think there is no H in the name. H is by mistake. This is Mark Douglas, Trading in the Zone. That is the book. Must read. Set your risk level. How much of your portfolio should you risk on any one trade? It can range anywhere from around 1% to as much as 5% of your portfolio on a given trading day. That means if you lose that amount at any point in the day, you get out and stay out. This will depend on your trading style and your risk tolerance. Better to keep powder dry to fight another day if things are not going your way. So this is very important to go by. Set, before you enter a trade, set realistic profit targets and risk reward ratios. Extremely important. What is the minimum risk reward you will accept? Many traders will not trade unless the profit potential is at least 3 times greater than the risk. That's what I talk about. So 3:1 is the reward to risk ratios that you should be having. And then, for example, if your stop loss is $1 per share, your goal should be this. We know all. Set weekly, monthly, and annual profit goals in dollars or as a percentage of your portfolio and reassess them regularly. Calculate your risk and rewards. Homework. Next point. Before the market opens, what is happening around the world? Are overseas markets up or down? Are index futures up or down in the pre-market? Index futures are a good way of gauging market move before the market opens. What economic or earning data is due out and when. post a list on the wall in front of you and decide whether you want to trade ahead of an important economic report. For most traders, it is better to wait until the report is released and then take the required risk and not an unnecessary risk. So professional traders trade based on probabilities. This is what I say. They always trade based on probabilities. They don't gamble. So this is one other important aspect that you should be, doing your homework. This is the pre-market, and you should not only be doing just before the market opens, but a good, habit is to filter your trades a day before. Then you should go for trade preparation before the trading day. Reboot your computer to clear the RAM. Whatever system trading and program you use, label major minor support resistance levels, set alerts for your entry and exit signals, and make sure your signals are easily detected. The area in which you are trading should not have distractions, no sounds, nobody disturbing you when a trade is happening, especially in the morning between 9 to 9:30, when most of your trades you'll be planning and executing. Make sure you are in a non-distracted area and you have not planned any work at that time, because if you're doing a work and trying to put a trade at the same time, that would be very, very inconvenient for you and you might incur a loss. Then you have to set your exit rules. On what base, on what condition will you get out? This is very, very important, and you should know your exits before you enter. Before you enter, you should be knowing your exits here. Now, before I go further, let's prepare for a small while we take a break so that you can look at the chart. The Nifty chart here. This is a daily chart of Nifty, and this is a chart of Nifty. So I'll take off the volume from here and I'll draw a channel. You can open your Trade Tiger at your place if you want, at that side. I want you to open this weekly chart and tell me what would you like to do at this time based on whatever you have learned so far. And we'll take a 10-minute break. Then I'll come back here and then we will discuss what you would like to do into the market tomorrow morning looking at this weekly chart. Okay, guys, back. So I'm getting the answers. One is Vipul has written. Let me see what are the answers. I'm getting good answers here. Vipul says Nifty trying to break the lower channel seems to be a good shot. Yeah, it is also making a continuation pattern. And you see the big wicks. The big wicks are indecision. Now, this is an indecision that can be in either direction. Is this the indecision of the bulls or is the indecision of the bears? That's only the next few weeks will tell. But one thing we know is the macroeconomics are not very positive. The GDP is growing at less than 5% now. We have a war coming up in Syria, and money is moving from India to abroad. The American economy is becoming very strong. So all that combined with what we are seeing here is giving us a little short signal. Yes, Then Milind Jadhav writes, Nifty has broken lower support of zone, looking in downward direction. This is very, very good observation, Milind. Let me write down what he has. This is the zone he's talking about, and we see that Nifty has already broken the zone. On a weekly chart, the zone has been decisively broken. On a weekly chart. Weekly chart is probably, one of the most important charts. Because at the most, people look at the intraday charts, and if somebody wants to look a little more, he looks at a, daily chart. So this is something that the chart suggests uh, that there's a lot of. So this is very important. That what Milind has said, that it is falling below the zone. And this is a very important observation. And it is also telling us, because it is gradually breaking the zone. It is not the first time that it has gone up. If you look at a week before that, then it has gone all the way down to about 5,070, 5,100 roughly. And from there, it has bounced up till 5,448. So 350 points bounce up. It has taken from there. But nothing has changed in terms of ground reality. People don't perceive India as a very attractive, investment place, especially the FIIs. So the moment they are getting a little higher up, they're just withdrawing their money. So that again is showing on the charts here. Then Girish, the chart suggests there was a lot of attempts by bears to pull the price below the channel, but currently the bulls are successful in the price above the channels here. Yeah, that's also a point, because the channel is decisively broken yet, but the zone has been broken. So right now the market is in sideways trend. That's what we are seeing. And once 5357, this is the level that is very, very important. And once this level is broken, then the downward side is there. And then presently Nifty is in a downward channel. That is what Vinay says. Yeah, this is what spinning top is what Rajendra said. Spinning top is there. Bharat says Fibonacci level 61.8% is not reached. So let's put Bharat's, where was the start of this move? The start of this move was here. Let me put the Fibonacci here. If I take this, then the market actually bounced back perfectly from the 61.8 Fibonacci level. Can you have it better than this? This is one of the best examples of Fibonacci. Thanks, Bharat. Even I had not seen this one. So this is one of the very good example of, and since it has jumped up to 38.2, so if it comes down, you actually have a level to look for if it goes down, which would be 5143. And you see what a perfect level it was from where the market jumped up. So head and shoulders, yes, there is a head and shoulder on top. If you look on top here, this is the left shoulder, this is the head, and that is the right shoulder. And right shoulder is a little lower than the left shoulder, which is giving very much bearishness to the price. And if we go by the rules of the head and shoulders, the neckline has been broken. And, people were asking me, sir, what is the level that the price might. So, and I said, well, let's mark the level. The level till which the price might go to is this, which is 4,718 levels, because this was the start of the move. That's where the move initiated. And if you see here at the bottom also, very interesting, we had a head and shoulder. Left shoulder, we had the head, and we had the right shoulder. And see, this head and shoulder took the price all the way up. So why won't that head and shoulder bring the price all the way down? Good thought, guys. Price can go up, price can go down. Good observation, guys. Nice. So proud of you. You could give me some real good pointers. And thanks, Bharat. You could find those good Fibonacci levels here. Great job. Okay. Let's go back to our trading talking about. Then set exit rules. Extremely important to have well-defined exit rules before you go into the trade. Many traders cannot sell if they are down because they don't want to take a loss. Get over it or you will not make it as a trader. Your stops get hit, it means you were wrong. Don't take it personally. Professional traders lose more trades than they win, but by managing money and limiting losses, they will still end up making money. Let me revise, and this is given on investopedia.com, the authority site. Read it 100 times. Professional traders lose more trades than they win, but by managing money and limiting losses, they still end up making profits. Extremely important point to remember. Before you enter a trade, you should know where your exits are. There are at least two for every trade. First, what is your stop loss? If the trade goes against you, it must be written down. Mental stop losses don't count. And second, which one is your profit target? Your 2:1, your 3:1, your 5:1. Once you get there, sell a portion of your position and you can move your stop loss on the rest of your position to break even if you wish. As discussed above, never risk more than a set percentage of your portfolio on any trade. So you should have very clear-cut defined exit, strategies, exit rules. Set your entry rules. This comes after the tips for exit rules for a reason. Exits are far more important than entries. A typical entry rule could be worded like this. If signal A fires and there is a minimum target at least 3 times as great as my stop loss and we are at support, then buy X number of contracts or shares here. The system should be complicated enough to be effective, but simple enough to facilitate snap decisions. If you have 20 conditions that must be met, and many are subjective, you will find it difficult, if not impossible, to actually take trades. Computers often make better traders than people, which may explain why nearly 50% of all the trades that occur on the New York Stock Exchange are computer program generated. Shall I read that again? This is bloody important. Computers often make better traders than people, which may explain why nearly 50% of all trades that now occur on the New York Stock Exchange are computer program generated. Humans minus computer is equal to, okay, if I make an equation, give me the right answer. Humans minus computer is equal to, can somebody answer this? Very good. Excellent, Naran. Excellent, Vipul. You gave me the answer. Let me write it down. This is probably a very important emotion. Human minus computer is equal to emotions. So, it's not computer, it's computer. Sorry, spelling mistake. So, then what happens is, if we say humans minus emotions, humans minus computer is equal to emotion, that means human minus emotions is equal to computer. That's why we need all these rules, so we can behave more non-emotionally into the market, because we are an emotional human being. We are emotional. And what you are trying to do is put yourself into a set of rules so that you can program yourself to be successful. Computers don't have to think or feel good to make a trade. Have you ever seen a computer dancing when it makes money? You dance in front of the computer, computer doesn't dance. In fact, the money was made by the computer, by the execution. And have you seen a computer breaking itself and crying when it loses money? You in front might be, breaking things around, but a computer is emotionless. And that's what you have to do. You have to program yourself for success. Conditions are met, they enter. When the trade goes wrong way or hits a profit target, they exit. They don't get angry at the markets or feel invincible after making a few good trades. Each decision is based on probabilities. And you might also want to read this article, the New York Stock Exchange and NASDAQ, how they work. So read your free time. Keep excellent records. All good traders are also good record keepers. If they win a trade, they want to know exactly why and how. More importantly, they want to know the same when they lose so they don't repeat unnecessary mistakes. So, also you should save your trading records so that you can go back and analyze the profit or loss for a particular system, drawdowns, which are the amounts lost per trade using a trading system, average time per trade, which is necessary to calculate your trading efficiency, and other important factors, and also compare them to a buy and hold strategy. Remember, this is a business, and you are the accountant of the business also. Extremely important. Perform a post-mortem. Always perform post-mortem. After each trading day, adding up the profits or loss is secondary to knowing the why and how. Write down your conclusions in your trading journal so that you can refer them again later. And the bottom line is the successful paper trading doesn't guarantee that you will have success when you will become trading real money and emotions come into play. You know, but successful paper trading does give the trader confidence that the system they are going to use actually works. Deciding on a system is less important than gaining enough skill so that you're able to make trades without second guessing or doubting the decision. So, those absolute beginner, once in a while, paper trading can help you trade your system. But what I believe in that trade with less money, but trade with real money. That is when you will be generating the real profits from the system. Then there's no way to guarantee that the trade will make money. The traders' chance are based on their skill and the system of winning and losing. There's no such thing as winning without losing. Professional traders know before they enter a trade that the odds are in their favor or they wouldn't be there. Real money, no paper trading, real money. So these are some other, one other area I've seen. So this is one other article that you can read which will clarify you about your trade. Your copy trade plans, make them individual. They should reflect your personality. Have photos into them. Have your kids' photo in them. Have your photo in them. Make them pictorial. Put there pictures of the things that you want in life. Put a goal sheet into it. Write your vision into it. Put your strategies into it. Put your techniques into it. Write it. Revise it. Revise it. See what is working. See what is not working. That's what will make you a good trader. It will take months, sometimes years. A few months of practice you will require. Then there's one more. I'll take this as a quick one. Decide which financial instruments you will trade, currencies, identify your market indicators. Like here we are going into more technique, identify your market indicators. For example, you might trade a particular currency. How will you trade it? Moving averages, momentum, trend lines. What will you use? Decide ahead of time how many shares or lots you will purchase. Just because you have money into the account doesn't mean you should go ahead and blow it. Set specific entry points. Write down the process of how you will monitor each trade. Decide the